Per usual, everything else channels for educational purposes only and is not intended as financial advice. Quite the series of events here on a Sunday before markets are open. For the quarterly returns, ETH still deeply negative, which is not something you want to see if you were expecting the first half of the year to be bullish for ETH. As a matter of fact, February this year was the most negative February for ETH on record. Good start to March, 2 days in, but you did not want to see that if, like me, you were expecting ETH to potentially do better in the first half of the year. If ETH can't turn the corner here in the first half of the year and doesn't historically do better than BTC in the back half of the year, it becomes an even tougher ask for people to hold on to this thing. Q1 for BTC pre-COVID, pre-ETF was mostly negative from memory, from feel. Vibes were generally down in Q1. Q2 is generally where things tended to pick up. You can see this string of positives from 2014 to 2017, 2019, 2020. So that's really where my head's at here. The expectation is a better Q2 than a Q1, just across the board. BTC did have more positive Februaries than the rest of the months outside of October. So to see a negative 17, again, not what you want to see if you're a seasonality believer. But March has been positive every year dating back to COVID. So we have that on our side. Friday, we had a bit of news on BlackRock adding BTC to model portfolios. This is how we win. This is how we get passive money for the infinity until end of time. 1% to 2% on trillions of dollars is a lot of money. And outside of wirehouses actively selling the ETFs, this is always the end game for BTC, is to get in some sort of model portfolio. I believe this is like the alternative assets portfolio or something that they mention here in the article. But in any event, a huge win for BTC over time. You know, they're not going to come in and buy 2 to 3% for their portfolio on one day. It's going to be rebalanced over time. And that's going to be done through the IBIT ETF. Friday or Saturday, I can't remember. I think it was Friday late. They tweeted out that they were having a White House crypto summit on March 7th. My expectations when I saw this was we'd probably drift higher into this and then get disappointed, as we have pretty much every time they've announced something like this. Maybe we see a stablecoin bill out of this. Maybe we don't. I don't know. We'll see what they say when we get it. But obviously the big news today has been the president of the free world tweeting out tickers, tweeting out XRP, SOL, ADA, and then following up with BTC and ETH. So that has obviously helped the market considerably. And as I said yesterday, everything in the technicals was bearish. That for many of these coins really hasn't changed. It's obviously the vibes and seeing something many were expecting going into the presidency. It's just interesting, in the disconnect between Saylor and price and doing nothing and waiting for the catalyst and then having the catalyst and then this whiplash plus minus whatever percent. I still don't know anyone who uses ADA or who really does anything on ADA. I don't really consider that a US coin myself, being that it ICO'd in Japan. It is based who knows where, but there you go. I'm sure some amount of political donations helped with the mention there. SOL, of course, has an FTX estate unlock this month, as many people are aware, to the tune of currently $1.95 billion notional, 11.16 billion SOL. Certainly a good time for some bids to come in. And I'm sure David Sachs knew that and was aware of that, as he probably holds some SOL himself. And on the ETF front, we had massive outflows last week, which is really what you want to see. You always want to see emotion, capitulation, fear. You never ever want to see slow bleed. Slow bleed is ETHBTC for years. Slow bleed is Zcash for years. Slow bleed is apathy. People slowly throwing their hands up or just selling the staking rewards or whatever. Emotion, fear, capitulation, that gets you headlines. That gets you people back at the table. That gets cash off the sidelines. And when we see it as quick as we do in crypto, frequently, you tend to get people paying attention. So it's good to see the wash out there. I expect, based on the president tweeting out about crypto, that we're going to see some positive flows next week, but we'll see. The most important thing really isn't like the day-by-day numbers. It's the weekly numbers or the monthly numbers. The weekly numbers here were the most negative on net ever. Okay, great. Now we get to see if all those people ended up selling what maybe the bottom for the quarter or the year, potentially. Depending on when these flows come in throughout the day, they could be T+1. IBIT is always T+1. That just means the flows are reported the day after. Something else that's extremely important to always remember here, not every dollar is a bet on going net long. Some of this is an arb trade. It's a net neutral trade. You long the ETF, you short the future, opening is neutral, closing it is neutral, you capture the fees. That's also getting baked in here. So based on the short futures positioning on the CME, a significant amount of this outflow was that trade. You just have to remember, not everything is always as it looks. Sometimes there's other stuff going on in the background. For ETH, also really nothing going on here flows-wise. And if we look on the weekly flows, just, nothing one way or the other. In-kind will help. ETH staking will help. Will it help enough? I don't know. Will it come with a Solana ETF that has staking and as additional competition? Probably, but we'll see. ETH still remains very much in a tough spot. As far as the Bitcoin ETF, MVRV, basically the cost basis, this has come down a lot. This is a good gauge to see how overbought or oversold we are. We got as high as 1.51. Previously, it was 1.34. So we don't have a ton of data here, but that's a good little range to keep in mind next time when we have a ton of basically unrealized profit just sitting based on a cost basis. That's come down to 1.18. This will be more valuable when we have years of data, but we have what we have now on the ETF side. As a measure of drawdown, it came to around 28% from all-time highs. This hasn't updated for today's spike yet, but that is within the reason, or within the realm of reason, based on what we've seen in 2016, the 2021 cycle. Well, we've certainly seen plenty of drawdowns, even throughout this cycle. 20% is definitely to be expected. 10% is soft drawdown, and anything past 20 is generally going to be pretty significant. And 30 is probably unlikely based on the ETFs. There continues to be this weird timing mismatch where we tend to see the weirdest stuff and lowest liquidity, right? So even though we have the ETFs, we still have oddball times because it's 24/7 where if you want to buy something or if you want to sell it down, you can do that. You have that ability to do so. But it should definitely be harder to get these drawdowns as far as they were in previous cycles because of the ETFs. Performance since cycle low also still within the wheelhouse of the previous cycle. And the slower this goes, the better. The bumpier this goes, the better. The more consolidation periods this goes, the better. It's obviously not fun to sit through a multi-month consolidation twice here now back to back, but it does allow you to position and have an opinion ahead of time. Whether or not you're right is something entirely different, but it gives you the opportunity to try and beat buy and hold at the very least. So currently we are 824 days from the cycle low based on price, based on halving. We're underperforming everything, which honestly I don't really care about personally. We clearly get some form of diminishing returns, and it just is what it is. Cycle's not over, so we'll see where we end up relative to everything else in a year or so. The more model portfolios we get added to, the harder it's going to be. Again, everybody hates us. Nobody owns BTC. That's the fact. And the more adoption we get from the institutional side, the harder it's going to be to push price lower. This is the 2-year moving average multiplier, currently up there at around 268. This is just really a sanity check. No issue there. Power law, sanity check, right? We're in the middle, no issue there. If we were closer to this red line, closer to the max expectation based on the power law, then you'd get more conservative. You'd probably dollar cost average out. You'd probably be buying less and selling more, that sort of thing. And we're still smack dab in the middle here, not yet into the craziness. MVRV, another sanity check, looking at on-chain unrealized profits down here at 1.85, relatively tame for previous bull market craziness periods. So we look pretty reset on many of these metrics. We had a good flush, good wipeout, and now we get to look at some charts. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to you as U.S. territory customers by Payer Ventures Inc., PVI, DBA, and Kraken. So we tapped the bottom of the cloud with the edge to edge. We tapped the yearly pivot. Okay, it's good. We survived for now. We turn on the volume profile of the visible range dating back to March 2024. We found support where there really wasn't any volume, so we'll take it. If 80 broke, it's very likely we would be at 70. So far so good on that front. Obviously, Legacy is not opened yet. We've got tariff stuff to worry about. We've got Legacy just selling down BTC to worry about. Hopefully, if you're bullish, you're thinking, okay, everybody's short or was short Friday and we bounced quite a bit. Now they're trapped. Now they're going to be a short squeeze to push them higher. That's certainly possible. I think it's going to take a little bit of time to get to an equilibrium here, but I think it's fair to predict some buying in the ETFs throughout the week. We're also back above the 20-week moving average, which certainly felt nearly impossible. And that's a key level we want to hold on any trend. So we've done what we needed to do. Cloud check, pivot check, 20-week moving average check. We're still in the cloud. There's a lot of uncertainty. Probabilities are equal, 50-50 based on cloud positioning. That's why I like us to really break like 97 by April. We could break it next week, but I think it's going to take us into April personally. So high time frames, support's held, great. We're above key levels, great. Low time frames for BTC. We were mentioning this head and shoulders yesterday. We broke out where we'd expected to break out. We broke out of the cloud. We hit the levels. This to me is slam dunk satisfied as far as what you'd want to see from a bottom on low time frames. And you got your answer very, very quick. You had a TA plus fundamental reason for the breakout. And that's always when you're going to get the most explosive breakouts. So what to do from here on the hourly? I don't really have anything, right? We need more candles. It's easier to set up a trade or make a call or whatever when you've got a chart pattern, right? When you've got this stuff into the cloud, all that looked great. We could retrace this back to 90. On Monday, we could go to 98. I don't know. I don't really have any big ideas here at the moment. We did what we needed to do on low time frames for BTC. So that looks good. And of course, the alts that were mentioned by DJT exploded higher, specifically ADA, which again, a bit questionable on the inclusion there. I don't personally get it myself, but it is what it is. It is what it is. As far as the setup goes, I got nothing. I really got nothing. It's in the range. It's above the cloud. Sure. Okay. You got that. Is it smart to buy a plus 60% day candle? Probably not, but who am I? Who am I to say? But in general here, I got nothing on ADA. Setup wise, it's back in the bullish weekly cloud territory, right? I got nothing. The cup and handle, I don't know. Very hard to trade something that is plus or minus, what was this? Plus or minus, so it was minus 60 plus 100. It's very hard to do anything with that on high time frames in that period of time. Certainly wasn't screaming a buy before the tweet. We can say that to be sure. I think one of the most interesting things of the group would be Ripple, which certainly had the bearish head and shoulders setup, completed the edge to edge here. It's definitely more likely than not that it negates or cancels this setup here at this point. Obviously, now that it's back above the right shoulder, it's not completely out of the woods yet, but it looks better than it did breaking down below 2. I can tell you that. If this does break up, you're talking 450, 550 as far as levels are concerned. But when to make that decision is going to be tough. Maybe you wait for a bullish GK cross on the daily. It's plus 30 in a day, right? What do you do here? I don't know. I don't have any good answers for you personally. I haven't touched it and likely to do anything at all. But if you're bullish XRP, this is what you wanted to see, a negation of a bearish breakdown in the cloud. Sold, big bounce from that 125 low. We'll see if we see follow through on this. Unlocks are unlocks, right? In March, that's happening. If it's FTX, they have either sold or hedged or have sold to somebody who's sold and hedging and will be selling or whatever, right? But that is very much likely to be sold completely as fast as they can in an orderly fashion, I would imagine. Whoever holds on to that. Daily's still deeply bearish. It is what it is on the cloud. On the 4 hour, the safest trade would probably be something relative to getting back above and holding the 4 hour. It's trying to do that now. We'll see if that holds Sunday into Monday. ETH also semi-large bounce back above the hourly there. It's just tough. If you've missed it at this point, if you missed anything, if you've just been sitting on the sidelines the whole time, what do you do? Do you DCA? Do you wait and hope for a dip Sunday, Monday? Do you just sit it out and think legacy is going to be bearish? Lots of ways you can skin this cat at this point, but something I certainly wouldn't chase would be anything up above 20% on the day, but that's just me. Generally here, not too many setups. One thing I was just watching out of curiosity was the fart coin chart on the 4-hour. Daily, not something I would ever touch, right? But interesting that this has had a multi-week move lower. I probably won't touch this, but very curious how this looks through the 4-hour cloud. Maybe just an educational exercise, something to watch for robustness on the system. Also interesting that LTC hasn't gone anywhere. Was not mentioned by DJT and is just flat, whereas everything else is up quite a bit. A lot of this is, of course, just catching people offsides in positions, people who are hedged on the legacy side and won't be able to do anything until markets open. So you're going to have some interesting movements just throughout early week. So bouncing 10 to 60% in a day, certainly not bearish, but most of these charts are still in bearish territory based on the cloud on high time frames. Just is what it is. We can look at Doge too. Is this a trade worth taking if this can reclaim the 4-hour? For somebody, it will be. I think I'm going to steer clear of it personally. The daily still looks awful. But I think we'll have a clearer answer into April. On some legacy charts, Trueflation, I mentioned this yesterday, going lower. I'm going to mention it tomorrow. Watching this very closely because eventually this will work its way into CPI and PCE and core and everything else. And eventually that means lower rates. And that's what we want on the crypto side. Dollar looks to be forming a head and shoulders here. Maybe. Still not bullish in the cloud itself. Crypto's happiest when dollar is lower. So anything below 106. And I'd expect alts to do well. I'd expect BTC to do well. It is great for BTC to see gold rolling over. Gold leads BTC by about 3 months. So that should bring us into April. As far as BTC doing something meaningful from a TA perspective on the move, just barely missed the measured move, but still gave you a really good setup here with the bullish TK recross price above cloud. Nothing I would touch here. I just wouldn't. The move happened on the daily. You're best off waiting based on the cloud for a Kijun bounce or a TK recross at that point on gold. I'll talk about this at the end, but I did another legacy screener. And it's funny because the dividend bond yield stuff all looks very good from a trend reversal perspective. The Europe-China stuff looks overbought. All the crypto stuff looks oversold. And so it really just depends on your personal ideas on positioning here. I don't think many people are going to be going full hog into TLT, okay? But this stuff is starting to turn around, is starting to look a little better. SHY on the bottom there looks great. Back above the high time frame cloud. Even the ag looks pretty good back above the cloud. So we can only hope that this is not recession things and this is just people getting defensive. But from a pure TA perspective, a lot of this stuff is finally turning the corner after being down for years, sideways for years, and is now starting to catch a bid again. This is the 10-year minus the 3-year, and this has actually gone negative again. If you ask Cam Harvey, the inventor of the inverted yield curve indicator, he will tell you that the 10-3 is what he prefers to watch as it is the better signal. So we went deeply inverted for a long time, uninverted, and now reinverted. We may, this is noisy, right? We may just uninvert again next week, but certainly haven't seen our recession come through yet. So it would be very interesting if this goes negative for an extended period of time again. And I've got to mention high yield junk bonds. A lot of these got picked up on the cloud screener. This is HYG. It looks phenomenal. You've got a multi-month inverted head and shoulders up here. It looks great on the cloud. It's got a horizontal similar to the horizontal it had in 2024. And as long as this is bullish, it's going to be hard for BTC to do poorly because it generally speaks to liquidity being in the ecosystem in a positive fashion. And you can see how this has looked in and around halving. Generally, HYG tends to lead everything relative to BTC. So it is very good to see the risky stuff look as good as it does. As far as the SPY, you're still in this multi-year, multi-month channel, it looks okay. It's kind of at the mercy of tariff headlines. I don't think anybody's super excited about sitting in this up here. Cloud just tells you it's kind of neutral. You're getting a bearish TK cross here probably over the next couple of days. Big wash out there. I don't really see anything to do here on the index. I think you're better off looking for individual names or sector ETFs, that sort of thing. This doesn't look too impressive at the moment. Looking at the equal weighted ETF RSP, similar to a lot of these dividend ETFs, these are starting to look very good. Now they're not going to outperform in a bull, but they are going to outperform in a sideways chop because of the dividend. And this is not with the dividend added on the chart. So collectively as a group, there are, I don't know, like 50 of these to choose from. This is just one of them. They generally look pretty good. Where you had your crazy sell-off in December, and now you've had some bid come back to these with the bull trend potentially coming back. This is NASDAQ QQQ, just again, bearish to neutral, really nothing to speak of here yet. The inverted head and shoulders on lower time frames broke out and then failed thanks to tariffs and whatever else. And the next time to take a shot on this would be bullish TK recross price above cloud. So that's probably going to take some time and not a screaming long here at the moment. This is the Mag 7 ETF, full edge to edge here on the cloud. You see this stuff enough over the years, and you tend to just shoot first, ask questions later when you're looking at a system that works most of the time. So when this stuff starts to break down, it just is what it is, right? And if the Mag 7 ETF is leaning bear, then it's going to be hard for most of the market on the index side to do well. Looking at S&P seasonality, it looks like March is sort of the nadir for the trend in general. And then into Q2, where things tend to do better, sell in May and go away, does well until July, August, September, into October, flat, and then Q4 takes off deeper into October. So just based on seasonality, where would you want to be more risky? Mid-March into April until maybe May, June, and then early July into August, maybe avoid September, come back in November, just as an idea. So look at NASDAQ. It's much of the same, just sort of amplified. Sell in May and go away. It doesn't really work for the NASDAQ, as it tends to just keep going the entire year. On the legacy crypto side, IBIT's going to have a massive gap when that reopens. It did get the full cloud edge to edge move. Really not a screaming long here on the daily. Again, this is going to take some time to reset. You don't go from flat for 4 months to straight down to straight up and then get a reliable signal here on the daily. So you're still very likely to be in the cloud there for a little bit of time. BTC futures has filled the previous gap from the election breakout, but now has what's going to be a potentially plus $10,000 gap when it reopens. And you got to wonder how and when that gets filled over time. But once again, you're in this pocket of unknown based on the cloud on the daily. 4-hour leveraged ETFs, BITU. It will be very interesting to see where this opens and closes tomorrow. Still not screaming along. I mean, it's like any altcoin here. It'll go up a lot. It'll still be below any trend metric you want it to be above on high time frames. Probably best to be patient on some of this stuff as it is closed right now and everything's moving, obviously. MSTR did get into the consider long bubble there on the pitchfork, still below the cloud, still bearish, needs to pull up above 350 to look good again. We'll see where this ends up this week. But the risk reward down here is better than it was at 500 based on the channel, right? For me, it's just easier to say, okay, I'd rather wait till April probably to see if this thing can get back above the daily than fool around with it in this death pocket between 200 and 400. But that's obviously one to watch. On Monday, you've got MSTX, which is the 2X MSTR that broke down significantly, I think like 50% over the past week. One of the more oversold ETFs out there with over 1 billion in AUM. And then there's WGMI, which could open between 20 and 25. I mean, you could get like a plus 30% candle on WGMI. I didn't buy this, even though I've been watching this for over a year at this point. Generally on the channel, this is the buy zone, this is the sell zone. So it's certainly tapped the buy zone several times, but not a lot of cloud rationale as to why you'd buy it all the way down here. But we'll see, again, what happens on Monday. As far as the screener, I'll put this in the description of video, but interesting that, all of the riskiest stuff you could imagine, including the crypto stuff, is all here, just deeply below the cloud. And then if you go to the other end and we look at what is way above the cloud, it's Europe, it's China, it's KWAB, it's FXI. Doesn't mean that stuff can't keep going, but I would certainly be careful. Some gold stuff in there. And as we get to the more neutral side, it's biotech, utilities, and then we get into the dividend ETFs, yield ETFs. And I'm not super familiar with most of these tickers, so it's good to just get a lay of the land, if anything. But generally, the things I like to look for are stuff like this. This is the mortgage-backed security ETF, MBB. What a phenomenal looking chart. Now, it looks a lot like SHY, AGG. Certainly look at the risks of this thing. But, if you're looking for stuff to do where there is setups, or you're looking to diversify or whatever, looking for trades outside of crypto, there's stuff like this that looks very interesting. Very interesting. This was another one, PEY, High Yield Equity Dividend Achievers ETF, where you're getting this bullish TK cross, price above cloud, emerging markets, sovereign debt. I don't think I'd ever touch this thing, but it popped up on the screener. Looked very interesting. And then the TIPS ETF, well above where you'd want to pick it up here, but this has broken out in a big way. So a lot of these yield ETF things from a defensive market lens have broken out quite a bit. And I'll just add one last one here, XLV, which also looks excellent. This is a healthcare ETF. Massive inverted head and shoulders there. Daily cloud breakout. Probably a daily Kumo twist here shortly. So if you don't want to sit in short-term treasuries, or you don't want to just YOLO crypto, there's stuff to do. I just don't think that stuff is on the SPY or the Qs or Mag 7. I just don't see it relative to the strength we're seeing on some of the more defensive stuff. But it's good to see some life back here into BTC. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.